Good evening, TheoTRADE. This is Corey Rosenblum, and you're watching the Theo, now the video for the 15th of August here in 2023, right in the middle of the month. Let's get a mid-month market update. We had an all-down day in today's session, with all of our 9 major sectors being down, the weakest one being XLE Energy, XLU, we'll see that in a moment, utilities, and financials down about 2%, not to be outdone by materials and some of the others, and that's where we'll start. In the bigger picture, it was good news from the retail sales. In fact, let's take a look at our calendar in this week. So we had the housing starts, or had the retail sales, retail food services, and those were a little bit, right? We all play the game of expectation, a little bit better than expected, a little stronger than expected, at least in terms of the broader picture. And that you think is going to send the market up? You'd be wrong. That sends the market down because it does show a little resiliency and strength in the economy. And that means the Fed has more leeway to raise those rates. And so it was not necessarily, we'll take a look at our CME probabilities of our Fed Watch tool. And that's one of the main things we'll take a look as we go forward. So just jumping into our Fed Watch tool, this is the probabilities for the rate hike in September. Keeping the rates the same, how we interpret this is roughly 90% chance that affected it. It went down a little bit. It was about 95. That's not of concern. It's the November possibility of a rate hike. So the rate hike possibility went up a little bit on the retail sales and some other notable news events as well. And that's what we'll be watching as traders. So we did have those retail sales. We'll have housing starts and building permits and U.S. industrial production. Have earnings from Cisco, Target, and Thursday gives us the U.S. Philly Fed with earnings from Walmart, Ross Stores. We had Home Depot in today's session. Home Depot was up, one of the strongest stocks in the market in today's session, early on at least. And then Friday, nothing major. We'll have John Deere, Estee Lauder, and just keeping that theme of retail stocks in play. But before we get there, strongest stock today was Amgen, Eli Lilly. Now Eli Lilly is pushing up to another 52-week high. Joining it is Comcast, Cardinal Health Group as well. But I'm not so much focused on stocks making new highs. I have my interest over here. Stocks in the S&P 500 making new 52-week lows. And just for the sake of the video and the time we have, just list out these: NextEra Energy, Northrop Grumman, Estee Lauder again. Think of it like a retail. It's a consumer staple, but think of it like a store and a retail name. Consumer staples technically. And we have others: Dominion Energy, Moderna. Actually, we'll take a quick peek at those. So here is Moderna, which, like Pfizer, PFE, continues a 2023 downtrend, weak stock getting weaker, lower lows in play. And those are the bear flag, or the bear or the put type of positions in a weak stock, starting the year weak and only getting weaker, not only in Pfizer, PFE, but right here in Moderna. Moderna taking a big drop to the downside, now is trading under the 100 per share level. Again, logic here is weak stocks get weaker. And some of the others would be NEE, that's NextEra Energy, that's utility. And actually we'll use that. Add a few others: American Electric Power, which is a utility. And then Dominion Energy, that's been on the list of weak stocks getting weaker. Dominion Energy on the bear side has made new 52-week lows. Speaking, not quite at 52-week lows, but speaking as a sector, this is something I've had my eye on, and in many discussions here in Theo, have discussed the weakness, think about that big arrow, in utilities. So utility stocks in general, Dominion, some of the others. In fact, if you want to take a look at which stocks make up the bulk of the XLU, that's right here in our Analyze tab for fundamentals. So you can do that with each ETF: NextEra Energy, Southern Company, Duke Energy, and down the list, Dominion actually takes the 6th spot. But nonetheless, these are the stocks leading the sector, XLU, to fresh new lows in 2023. While we're on that, this is what I've been bringing up as well in videos and in the end-of-day sessions. If you're taking your perspective from the XLK, you'd think we're in a bull market to end all bull markets, even if you looked at XLY, which is the broader retail sector. But something Don has been discussing as well, you would be mistaken. The broader retail sector is not so broad. Amazon, Tesla, Home Depot, McDonald's, Lowe's, and Nike make up the bulk, around 50% or so, of the XLY. And you've heard it here too. Apple and Microsoft throw in Nvidia, which actually was a strong bullish stock in today's session, and Broadcom and some of the others. Cisco again has earnings, and you'd see that the XLK is again only a few stocks. You can do this with each individual sector. But just note that outside of the XLK and outside of some of those big stocks, our AI, artificial intelligence, or tech names, monsters of tech here in TheoTRADE, it really isn't a bull market. And taking a peek at XLU, we can see that. V is going to be healthcare, and I like to judge percent, particularly in swing trading, off the beginning of the year. So right here in January, we've had a big down, a big up, back to the start. That's unchanged on the year. V, which is healthcare, took us back to the bottom of the range. And now we are, don't worry about the pattern, looks like little flags, but it's unchanged on the year. That's not bullish. P is going to be staples, consumer staples. Estee Lauder, we just saw it as a stock that is hitting fresh new 52-week lows, consumer staples. In fact, we can sort by sector and find out that utilities, some of the healthcare, and some of the consumer staple stocks are in the list of those weak stocks getting weaker. So P is down on the session 1%. And it is energy, XLE, which is also flat on the year, just a little bit flat, taking us back from 90 per share in that ETF. And that would be crude oil, which had a rally up to its sideways resistance high. That's about 84 per barrel in the crude oil futures market. And that's going to be a sell short or a swing to the downside, having achieved that target from beneath. And then B is going to be materials, XLB materials. I is going to be industrials. And that's the other stock that is positive, or the sector I should say, that is distinctly positive on the year. And a little sneak peek inside of industrials shows Caterpillar, Union Pacific, Boeing, UPS, Raytheon, GE, and some of the others. Deere. Remember, Deere is going to have earnings on Friday. And the other sector we'll take a quick peek at is going to be financials. Financials, again, mostly flat on the year. So most sectors being flat to negative in 2023 does not a bull market make. So keep that perspective as you're putting swing and even short-term trades in your portfolio. Not all is bullish, and it is not all Nvidia, and not all Lilly, and not all these other stocks in the broader market. Lilly is a strong stock, getting stronger, kind of going against the trend there. Most stocks do not have this trend. We can look at Meta and stocks that do have large market cap weight, but in today's session, even though there were small pockets of green, that was not significant. The broader market was down. The advanced decline was down. We had a correlation to the downside in today's session. We can see that with the stocks, sectors, and of course the index performance down about 1% across the board. But it's the Nasdaq that does have those mega cap stocks, and they are right there. Remember that the Russell does not have that weighting in its index, and a little bit lesser extent are those big monsters of tech. And always remember, though we call them monsters of tech, Amazon and Tesla fall in the consumer discretionary. They are retail stocks. At least that's generally how they behave. And the others would fit in the information technology or communication or just broadly technology. And finishing up the bond market, TLT, is back at those 2023 lows And seeing this from the futures perspective, we're a little bit under those and how the contracts are calculated. So ZB is your 30-year Treasury bond. That's back at 2023 lows. And ZN, again, the way that the futures contract rolls, down under that 110, which is fresh 2023 lows. At the same time, and this is where we'll end where we started, about interest rates and the Federal Reserve potentially raising those rates. And with the retail sales number a little bit better than expected, maybe they do use that as a backdrop or a reason to boost rates one more time to cut inflation. Either way, the TNX rose up to a new high, roughly 4.3%, 4.2%, and that's how we read that, 4.2%, not 42, 4.2, and that's a new high in the yield market, right there with a new low in the price of the bonds. So finishing up this week, we'll have a few more earnings. Cisco, we'll look at Walmart, John Deere, some of the others. Target, going to be on Wednesday as well. And a few other economic reports to get us through this midweek and mid-month, mid-August market update. As always, be careful and safe. This is Corey Rosenbloom with tonight's Theo video update for August 15, 2023.